Hi guys, Any aka the Not Trader, your friendly neighbor swing trader, back again with another video. And today I'm here with the spiritual leader of Saint Slippage, an E-minis futures trader, and just all around musical extraordinaire, Cardinal Cash. How you doing?
I'm good. Knock, what's up? How are you?
I'm great, man. Thanks for joining me on the Pip Talk podcast.
Thanks for having me. This is actually pretty cool. I watched a couple of your episodes and it's kind of fun to be here. You are
Cheers, man.
officially my first interview. So
Oh,
thank you.
awesome, man.
And
Glad to
thank
be
you
the
for
first one to
letting me,
catch you.
thanks for including Saint Slippage, the beautifulest cathedral of all of Fintuit.
Of course, Slane Slip. I love the love the decor. I love what you've done with the place. Where's
Yeah,
the rest of
that's the ladies over in church management, head sisters. They really take care of this place. I'm just a visitor in their corn, as they say. So they do the cleaning of the lights up here and make sure that all the dirt from the confessional booth is out the door. So ladies in an administration office, thank you.
It's good that you're keeping the social distances as well. No one's in the pews. But let's let's get down to business.
All right.
You listen to a lot of house and dubstep. When I followed your channel, I was looking at some of the videos, and you like a lot of house and dubstep. Any reason you listen to that while you're trading in particular?
It's interesting that you call it dubstep. And I'm actually kind of curious where you came up with that. I play a lot of what I consider here in America to be called 90s era industrial EBM, or some refer to as cold wave. Back in
Okay.
back in the 90s, back when like Marilyn Manson and
Okay.
all the guys were sort of getting big, there was a big goth scene here, and we called it industrial EBM or cold wave. And so that's kind of the majority of the music I play, because I'm a little older. That's what I was having with music. And yeah, when you're sitting staring at charts endlessly, it's nice to have some good music up. On that last red, I guess, brick or line in the sand. Yeah, that would put me in a better position. But actually curious, like, what you took it as dubstep, which is actually really
Maybe it's just me showing my age. I just attached that to. I wasn't sure what genre that actually lied into, because in the UK we have kind of a mesh of so many different genres that kind of bleed into each other in that type of scene. So I wasn't sure whether to call it dubstep or to call it trance or to call it, I don't know what it was, but there's quite a few different scenes that kind of mesh together in especially in the European like dance type of scene, or the music scene. So maybe I got the genre wrong, but
it's been actually a lot of fun for me, because I play like all these songs and music that I listen to all the time, and I get so many people hitting me up on DEM going, what was that song you played at 5 minutes in your broadcast? Like, I went and looked up that band later, and I totally went and got some of their records. And so I sort of feel like now this like ambassador of old 90s industrial goth music, of like, hey, check out all these bands. So it's kind of actually been kind of cool. Like, and a lot of people have sent me a lot of cool shit that I missed. So
I
yeah,
think you need to start a Cardinal Cash Spotify playlist.
Do you?
Maybe you should start one. Maybe you should start one.
Yeah, well, you should go on Spotify then, because I have 5 of them.
Oh my days, burn my mind. Okay.
Got to hook you up with dubstep music.
So you've created a lot of funny and interesting content for the trader community, such as the Bloomberg Babies video.
Well, calm and collected. Scarlet Flu will guide you through. Courtney Donahoe, pushing news flow. The ladies know what's up, so hedge up. My Bloomberg Babies on the air. Post those charts without a care.
And even some of the videos that you've made, the satirical videos around how you can create a mentorship program. How did you come up with these videos? And do you have any other videos in the work?
Bloomberg Babies was a concept that I came up with David Cooper. He and I have been talking for years about working together on a song. He's a active trader as well, and he does a lot more music than I do. And actually, well, it's not true, since I actually work in music, but he's actually putting out stuff all the time for the FinTwit community. And so he and I were going back and forth about doing a song, and I sort of pitched this idea to him, and he's like, absolutely. And we would share lyrics back and forth. And we literally did that entire track very postal service style, where like I would write some lyrics, send it to him, he would then send stuff back to me, I would work on a track, he would do some vocals, and it took forever to do it. And the concept, we just laughed our asses off the entire time, and we just kept throwing all these people into the lyrics that we thought we should like include. So that video came out phenomenally better than I could have ever hoped to, and I 100% credit David Cooper with helping me do that. As far as future stuff, I think I have one more big involved video in my blood that I can do. These things are a ton of work to do. That thing took months to film and edit and get it going. Not because it's a ton of work, it's just we're trading. We have jobs, we have families. But there's a song I've been working on forever called BTFD by the fucking Dip. It's sort of a full-on Rob Zombie metal ode to going in and just buying markets with full fist down. I got Adam Webb over at Macro Hedge to sort of be in it and help me with some of it, and it's totally my fault. Like, I have dropped the ball on that song 4 or 5 times now. The music is done, mixed. I love it. It sounds great. I did start filming again a couple weeks ago, and so I would say by June, July, there will be another large video coming out of Saint Slippage again, and I'm really hoping on this one to include the entire FinTwit community.
Awesome.
I want to get people submitting videos and photos and stuff of them, and editing it in, and just making this a total like group effort video, because this might be my swan song, I guess. So
that sounds awesome.
so yeah, there'll be more, but
Yeah.
probably just 1 or 2 more at the most. They're a ton of work.
Social media has also created a massive influx of trading gurus and people selling courses and alert services and even custom indicator packages. And you also made a quite hilarious 3-part satirical video on how to start trading mentorship programs. How can a newbie who's new to the trading market differentiate between a legitimate mentor and a fraud that's just running endless YouTube and Instagram ads?
The problem is it's really fucking hard, because nowadays everyone's got really fast computers and they've got graphic design apps and video design stuff. And you have all these guys out there that, you can create, a lot of us joke about that FinTwit is riddled with what's called lifestyle marketing. So you get these guys that go out and they're selling some sort of training service or alert service or black box platform to help you trade. And they can go on Instagram, YouTube, and for a couple $1,000s, they can run ads and make it look awesome. And they're by the beach and they're trading from their laptop and life is awesome. And don't you want to be just like me? And so I would say that the line between reality and all the fakery is so blurred now, because the production, look at any Jeff Bishop or Raging Fool video. They're on planes and it looks fucking awesome. So how do you differentiate? I think what myself and especially what Brian Watt are doing, YouTube streaming is probably the best option. If you're a trade mentor, a guru, or an educator, and you can't go like 15, 30 days every now and then streaming your screen, including the ladder or the DOM or whatever order entry you use, if I can't see the markets and the charts moving in real time, and I can't see you inputting orders in real time, and I don't know. That's sort of become like my line in the sand. My big thing forever was, within 10 to 15 seconds, when you do trades, post it on Twitter. The price level, the quantity, and what your expectation for either for a stop loss or a gain is. And when you're out of the trade, within 15 to 30 seconds, post the price, the exit, and the quantity that you close the trade out. And that way anybody can look at the timestamp on the Twitter feed and look at the charts and go, yeah, okay, I see that. Those totally line up. That's a real trade. Obviously, I think that's the easiest one, but the greatest one is what Brian Watt is doing. And I put this out as a challenge to all the mentors, guru, reject nerds out there. Like, go on YouTube. If you can't stream your trades in real time for us to see, and you don't have to do it forever, just do it for like a couple weeks, once a year, then I'm just going to assume you have something to hide. If you can't do it, you got something to hide.
Live trading, live streaming is one way to do it. I've actually been doing it periodically, weekly, but I'm a swing trader, so it's not as sexy to watch if you're live trading and watching the 4-hour chart. But I'm guessing that your trading strategy is more aligned with something that can be easily viewed for entertainment purposes or even for educational purposes as a live trading in live trading, because it's you do day trading, right? So if you could explain to me a little bit more about your trading style and also how you got into trading.
And so my trading style, it's fluid like anyone else's, but there's sort of probably two main things that I do all the time. I probably have two big approaches I do. One, everyone knows I'm a dollar cost averaging trader. So I like to leverage into large positions over a bunch of price zones or over time. So what I would do, like an average trade for me is like, okay, I get up in the morning, I look at the daily chart. I'm big on the Heikin-Ashi candle. So I go, okay, markets are trending up. The daily Heikin-Ashi is pointing up. I'll look at, like in your example, either the 1 hour or the 4 hour, again, using Heikin-Ashis. As long as everything's green, everything's pointing up, I'm going to assume at that point it's a buyer's market. Buyers have the ball, all good. So at that point, I will look at the smaller time frame chart and I look for pullbacks, not little ones like good ones, like 10, 20 points. And so then I'm real big on channels, drawing,
Yeah,
down
yeah,
lines. And so, the daily and the hourly are up, but let's say I'm a tick trader on the 5,000 tick chart, we've been going down for a couple hours. I will then, draw my little line, my little down channel. And the second that price starts to sort of get out of or bash out of that down channel, I will throw a couple contracts at it. Now I could be totally wrong and it keeps on going down. And most of the time it does. It usually takes me anywhere from 4 to 5 attempts to build out a position to finally get a pretty good line in the sand that then once markets either flip the other way, go back to their normal upward momentum that they've been in on the hourly and the daily, I have a pretty good position on, and at that point I can make some pretty good money. But yeah, I'm essentially fading pullbacks of a larger uptrend, and I use, like I said, mostly channels to do that. So that's the dollar cost averaging thing.
yeah,
You
yeah,
basically build up like, okay, I'm gonna do two contracts, and there might be 10, 20, 30 handles between each of those entries. But by the time we do get sort of a reversion to the mean or things flip around, I've got a bunch of contracts on, and so I don't need it to go very far in order to make pretty good money on that trade. The second thing I do, so if the market isn't really akin to that, and I wake up and like either we're just going sideways or there's just not a whole lot going on, then I will use the 5,000 tick chart again, and I'm just a pure scalper, sort of a little similar to what Brian Watt does. I will take a 5,000 tick chart. I'm a big user of the Hull moving average, and I will have it tuned to something pretty close to where it follows pretty in line with the candles. And I am just essentially buying little pullbacks into the Hull. So imagine if you have this is the one I tell people, if you have a 5,000 tick chart and you take a 35 period Hull and both of them are going up, you're going to get a few red candles in that upward thrust or that upward trend. So whenever we get little pullbacks into it, I will throw 1 or 2 ES at it, and it will usually move, I don't know, 2 or 3 handles up, and I will close out. My goal is usually anywhere from 1 to 5 handles, and I'm done. And I will just
okay.
keep scalping and scalping and scalping along with, as long as that Hull is facing up.
Oh, fair enough. Yeah, that makes sense. That's actually a very kind of, you gave a very detailed example of how to your strategy. That's really useful, especially for scalpers. I've got a lot of respect for scalpers. It's a trading strategy that I've never been good at. Do you consider scalping a mentally exhausting way to trade?
Is scalping mentally exhausting? Yes and no. It's kind of both. On the yes side, yes, you do have to sit and watch the charts for long periods of do nothing time. Uh, the trades are easy, but the waiting, the patience is not.
Mm,
So yes column. On the no column, no, it's not that hard because you're really only going for 2 to 5 handles on each trade. So these trades are pretty quick from getting in to getting out. You're in, out, in, out. And again, like for me, I know there's other guys like Brian's a good example. Brian will do hundreds of trades in a day where he's in, out, in, out, in, out. And he's
mm.
only looking for a couple ticks each way. For myself, I tend to go for more like 1 to 5. So, but those happen really quickly. If you have a trending moving average or whatever tool you're using, if you get that pullback and you get in, usually that trade only lasts, I'd say 5 to 10 minutes. So it's not that exhausting. At that point, you're just a button clicker. It's like, all right, pull back, click, goes up, click, I'm out. The exhausting part is sitting on your hands and waiting. There's nothing going on. So if you're
Yeah.
not okay with sitting in front of the screen for an hour and a half until the right situation sets up for you, then yeah, it's really exhausting.
Yeah. So what type of mental skills do you think you need to be a good scalper?
To me, scalping isn't mental; it's more mechanical
Okay.
repetition.
Yeah.
You have to have the ability to hit the buy and sell buttons without giving a shit about the outcome. So basically, no emotion. Just
Yeah.
you're just a machine, and you have to have sort of a core strategy, but we at the same time be willing to bend and change the rules as markets mutate through their different cycles. We have big raging up days and big down days and sideways and all points in between that frustrate traders left and right. So you have to be pretty malleable. And I always like tell people a lot, like, how you trade as a scalper when the VIX is over 40 is totally different than how you would trade it with the VIX under 20. So
Mm.
it's not that you have to have the mental skills. I think you have to have a basic platform that you're always doing from rote. And at the same time, you got to be a little bit flexible for when markets sort of throw you curveballs.
So given the strategy that you use, how do you manage your risk as you're scalping, and do you ever use stop losses?
Very good question. Uh, Anyone that follows my feed knows that stops are absolutely, I admit it, one of my
Yeah.
weak areas. This is an area that in the year 2020
Yeah.
of Saint Slippage Lord, Pope Prophet III, I've been working a lot on. I generally don't like holding positions in the Globex and all the fuckery that comes with the machines at night.
Yeah.
So at the bell, or when we get close to the bell, I will start letting go of contracts that are in the red. If I'm in a position I've been building up, like say I'm doing one of my cost averaging trades, and I'm the bell's coming up, or even if the bell hits, we got that 15 minutes after, like, and I'm red, I will just start letting them go. So I guess one of my stop losses I don't like to hold in the Globex. Um, for risk management, I try and use the max drawdown feature on my platform. So I use Trade of 8, and it has a feature in there, which I'm sure many platforms do, where you basically can tell it in any one trade, if you hit a certain amount, it'll auto liquidate. Sometimes having
Yeah.
another person, in my case, a computer, make the decision for you
Yeah.
is,
Yeah.
as much as I say, don't get emotionally attached to trades, we do. So I have a thing in there, and I think I change it based on what the conditions are. Like right now, VIX is kind of like not too big or bad or low. Like I think we're still in the 30s. So I think I have it set to $800. So if I'm doing a dollar cost averaging trade, if I keep throwing contracts at it and I get down to $800, the computer will just liquidate it right away. That's probably the best system I found for me that works. I really, really this year would like to get good at just making stop losses a generic thing that I do, that I execute without even
Yeah.
thinking. So I'm working on it. Like anyone else, I have my weaknesses, and that's one that I'm working on.
Yeah. Manage your risk and live to fight another day, right?
Yeah. Yes.
So I know you really preach about the tick charts. I know that's your bread and butter, but why? So you get excited about it. Why tick charts over why not the 5 minute and 10 minute candlestick charts that's like most people use?
Tick charts versus minute charts. I've done many a video on this topic, and honestly, I don't have an issue with time-based. That's a fucking lie. I fucking hate time-based charts. I hate anything that generates information on the screen for no fucking reason than the clock is ticking. To me, every candle represents something. It tells some sort of story. And there's a lot of guys who trade 5 minute charts will say, well, yeah, even when things are going sideways, those sideways candles tell a story. But my thing is, information matters. So while ticks aren't perfect, Renkos aren't perfect, minute charts aren't perfect, the one thing that I've been able to wrap my head around very nicely is that every candle matters. I only want to be trading when there's activity going on, when there's transactions happening. It's like going to the store and there's like nobody in the store. Do you want to trade in that circumstance? I want to see things going on. And at the same time, I want to see that my levels matter. I want to see that my channels matter. The best example I've seen, like why I think Tick or even Renko to a certain degree are just phenomenal ways to trade over say a 5 minute chart, is if you have some action going on and then it goes sideways. Let's say you're using RSI or an oscillator of some sort. By the simple nature of the 5 minute chart going sideways for an hour or two, all that overbought or oversold oscillator indicator action you have going on basically goes back to zero. It flattens
Yeah.
out. It flattens out because candles are being generated because nothing's going on.
Mm.
So all your indicators get basically reset back to zero.
Yeah.
Say you're using a channel of some sort. the channel gets knocked out because then you just get a bunch of candles going sideways that eventually cut through your channel. And so to me, it negates half the stuff on the screen that you might use to trade. So for me, it's ticks. Rankos are great. There's other ones out there. I think some people love range bars or volume bars. To me, they're all kind of just variations of the same thing. But yeah, that's why I am such a preacher of anything but basically it's time based.
But that is the beauty of trading and even technical analysis trading, because 1,000 people could be successful and they'd all use different strategies, and their strategy might work. And it's always great listening to other people talk about what strategies they use, what indicators they use, and how it works for them, because I can learn from other people's strategies and the way they trade. And at the end of the day, the name of the game is profits. If everyone's doing it in a slightly different way, it's always great to hear how other people are doing it, and maybe even take some pointers for how they do it, and maybe integrate it to my own strategy sometimes, maybe not all the time.
What's the main type of chart you use? And are you more of a tick guy?
I'm technical. I don't really do forex. I'm more equities. I'm more indices and ETFs. But because I'm based in the UK, I'm a swing trader. I'm predominantly a swing trader.
See,
so
looking at your other videos, I thought you were mostly an FX guy. I've seen you talk a lot about crude and other.
Yeah. I talk about crude. I talk about crude oil. I'm quite. I'd say I'm asset agnostic.
So whatever's moving, asshole.
Yeah. I'm a bit of a slag, as they say in the UK.
Okay. So what's sort of your default chart you love?
Pretty much the DAX, the indices, the European indices, or just equities, so stocks and shares. But right now,
do you trade? Are you a minute chart guy, or like a time based chart?
No, I'm swing trader. I stick to the 4 hours and stuff like that. I find changes.
No time based though.
Huh?
That's a chart though, 4 hour.
I know, but I love it. It works for me. It's not working for me right now, though, with the COVID. But I've lost him now.
All right.
But yeah, no, it works for me. It works. But I'm quite. I'll show you some of my technical analysis videos. I use quite a few different strategies, and actually that brings me on to the next section, which is really it's quite interesting about indicators.
Okay.
You talk a lot about less is more when it comes to indicators. Now that is grossly the complete opposite of my strategy. Maybe it's that drink. That's why you're doing less is more.
What were you saying?
Yeah, you talk about less is more when it comes to indicators, and my philosophy is the complete opposite of that. If you watch my chart, you'd probably pass out if you saw my dashboard, because I use the MACD, I use the RSI, I use exponential moving average, simple moving average. I got lots of stuff on my chart, and I love it, and it works for me. Tell me why what I'm doing is wrong. Show you're working out.
Well, first, I forgive you. I forgive you for the sins that you have clearly made.
All right.
Unless it makes money. If it makes money, then
if it makes money, it makes sense.
I still fucking forgive you. The less is more approach. I think the general question is, are you against indicator-based trading? And the answer is generally yes. They all lag. They all tell you nothing about what is going down on the screen. I'm pretty much, besides St. Slippage Cathedral, the other church I used to preach at was called Pure Price, Holy Pure Price the Fourth, which basically means all the things I'm talking about, like whether you're a Renko guy or a tick chart guy or whatever, they're all based on something actually happening on the screen. They're pure price. They're not affected by anything else. So whether you're doing RSI or stochastic or elder ray or any myriad CCI, whatever you're trading with, they're all just feeding off what's happening on the screen, the candles. So they're, in a way, they're all just derivatives of price. They're a secondary thing of what's really happening. So why do I want to trade off something that's already behind the action of what's happening? I mean, you can dial down the indicators to be super sensitive, and where they are at that point just mimicking the candles on the chart, or you can, at that point, just trade the candles, or you can make them super slow to where like they filter out noise and you're not going to get false starts. But then at that point, well, now they're just lagging behind everything. So when something really crazy or some news thing hits, they're always 2 steps behind what's going on. Like the reason why I love price levels and channels
Mm.
is those are basically hard lines on the chart. And and again, in my world, in tick world, candles are only made when something's going on. If there's news, then a bunch of candles will be printed. There'll be volume, there'll be action, there'll be movement. Um, and you can just look on the screen and very clearly see this is what's going on. I'm not waiting for an oscillator to cross over a thing that then diverges from this other thing. That it's just look at the fucking price. Like whatever the fucking price is doing, trade it. So
Yeah.
I'm not totally anti-indicator. I mean, I do still trade with one moving average, but I just don't see how they help in anything.
So what is the indicator that you do trade with? You said you trade with one. What indicator is that?
Um, the hull, moving
The,
average.
okay.
So yeah, I mean, are there any indicators that I use? I mean, I guess it's
Yeah.
really an indicator, but yeah, I use one moving average, which in reality I could actually turn off. It's really just me being lazy a little bit. You get, it's like, it's nice when you're across the cathedral and you can look over your computer and you got this one moving average on the screen and you make it nice and big and fat and a color. And you can sort of see like, oh, we're trending up, or, oh, we've been trending up for a really long time. Maybe I should go contrary to the trade in a second. I mean, if I turn the hull off, I can still trade my exact style. It's a nice little crutch. The thing I do like about the hull is it's really reactionary. It's really sensitive. So it travels pretty close to the candles on the screen. Again, that pure price mentality where, if candles are shooting up really quickly, the hull is following behind very closely. So, yes, it lags. No, it's not perfect. It is kind of just something I can look at from across the room. But I mean, that's the one that I use. Other than that, no indicators. Less is more on my screen.
So do you record any of the trades that you do, like for in a journal or for future analysis purposes?
Do I record my trades or document them? It's funny you asked this because this topic came up very recently, again with my good friend, my BFF, Brian Watt. So to quote my BFF, Brian Watt, I have to ask this back to you. DOC, sorry, NOC. It's confusing some of them.
Dr. Dre here.
Yeah. But I guess it kind of just comes down to this. And I actually am going to quote Brian on this. Like,
Yeah.
does a plumber go home and write his feelings in a journal about unclogging difficult drains? Like,
Maybe.
if had a really rough day, like roto-rootering, does he go like, oh man, I went to that house and there was shit everywhere. Like, I didn't know what to do, but I navigated it. I fucking handled that stuff
Yeah.
like a goddamn pro. No, like you do your job. You show up, you see the situation, you take an assessment of it. Hopefully you're a smart person. You then jump in and fucking solve the problem. Every single trading day is completely different, and endlessly waxing poetic about a scalp you took a year ago. I'm sorry, it's not very nice to say. It's kind of fucking retarded. I mean, if anything, I look forward to trading against journal-based traders
Yeah.
because they're sitting there writing things down, they're thinking too much, and they're reacting too slow. So the shorter answer, no, fuck edge wonk and fuck your journal. I look forward to taking your goddamn money. I will
Oh, you
take your
went for
money.
edge rock.
If you're a journal enterer, this is probably your money that I just took from you.
But there must be some sort of
Next question.
No, okay, fine. No, I'll let you.
I'm kidding. You can have it. You can have it.
But there must be some sort of statistical relevance in people. Maybe not in writing down your emotions and your feelings, even though it might be useful for some people who maybe that's their biggest struggle in trading, not the actual technical side of it, but maybe the emotional side of it. Maybe they need to log it for their own purposes. But what about like some people find out that after looking at data that they may lose all their money on a Wednesday or something like that. Or, I
Yeah, but
don't know.
that's a little bit different. That's almost like a trader's almanac. It's sort of like we've sort of been joking lately. Like
Yeah,
everyone knows, it's actually the MOC algo, the market on close.
yeah,
But we've sort of been, in our little group on FinTwit, we coined this thing called, the murder algo,
yeah,
which fires off every day. For me, it's 1250,
yeah,
350 New York. And like, yeah, if you have some like general notes, like an almanac of like, okay, the
yeah,
market this on these sort of days. On Mondays, I tend to trade a lot better. On Fridays, I suck. I mean, for me, I have mental notes too. Like I do phenomenally great in the morning. Like some people call it amateur hours. That first 30 minutes when markets open, like, oh, don't trade amateur hours. The first thing every stupid trade mentor tells you to do. And my thing is like,
Ridiculous.
that's actually when I make most of my money.
Yeah, that's when you make the money.
It's the second half of the day when things slow down and
Yeah,
the big funds come in and do their portfolio management of the
yeah,
ETFs, and I get killed.
yeah,
So it's not that I'm no, actually it is. I still think journals are stupid. If you have those problems, then do something simple as pull out a Hello Kitty piece of paper and write down on it, don't trade the afternoons, and then stick it to your computer. And
true,
there it is.
true,
There's
true.
your journal. It can be a single piece of paper, a couple notes of some dumb things you repetitively do, and you're over. But sitting there going, a year ago, I did this scalp. I felt very strong about it. Everything was lining up exactly how I thought it should be. So I executed like a fucking boss. Killed it. Like, are you really going to reflect back on it a year later and go, what mood was I in that I took that amazing trade? That I never did again. Like, get the fuck out of here. Go to the fucking confessional booth again. I can fucking take your goddamn money. Next question.
Next
I think
question.
the liquor's finally kicking in.
So, do you believe that the theory of, well, it's not I won't call it a theory, but do you really believe that 95% of traders are unprofitable and fail?
Do I believe that 95, I love that number because that's been thrown around forever, that 95% of all traders eventually fail? No. It's probably actually closer to 97%.
Yeah, that's what I was going to say.
97% of traders come into this game with
Yeah,
too small of an account, too complicated of a setup, and all their colorful little crayon indicators on the screen. And then they start overthinking from their fucking journal about executing a trade, probably because they're too busy, as I said, journaling. So no, it's 97%.
yeah, probably.
No, it is. It is, if not higher.
Why does this statistic continue to be true then?
Because all of the reasons just mentioned above. There's a general belief that since the dawn of day trading that you can basically click buttons, make six figures a year, and take exotic vacations with your boo bear all over because you were smart and you're on your little laptop in a suburban bedroom making killer trades. And so, as long as that dream, the dream of like, I'm going to trade from a desert island with my family behind me and I'm going to make these killer awesome decisions in real time, and then I'm going to close the laptop and have my margarita and live like a boss. As long as that dream, that lifestyle
Yeah,
marketing guru bullshit dream continues to live, um, then the 97% statistic will continue to be true forever. There will be endless people like you and me to take money away from who believes that dream and are journaling in their edge wonk.
exactly. I call them the market liquidators. So, but why would a profitable trader want to also continue working a full-time job then? Why not go full-time?
If you're profitable, why would you not just go full time and just go balls deep in it?
Yeah,
The same way that traders talk about having a diversified portfolio, you would also, I would imagine, you'd want to have a diversified income stream as well. I mean, we talk endlessly like that stupid Kramer show, like, am I diversified? Well, if you're just trading and that's all you're doing,
mm,
unless you're God's gift, then awesome, do it. But again, I think you fall under the 1.2% of people that can do that. As traders, especially intraday day traders, I mean, some months we absolutely kill it. Some months we absolutely got crushed. I had a
yeah,
very difficult week last week. Um, your landlord or your mortgage holder doesn't give a shit that you had an unfairly and fucked up trade in Apple or crude oil. They want their rent paid. I personally work a full-time job and have since I was 18. And at the same time, I am heavily actively trading every day and have been for almost 10 years now. I eventually hope to invest for myself in some brick and mortar side businesses. I'll take some of my trading profits and invest in that and do other stuff. But I will always have multiple income streams. Every trader should. So I mean, it's just smart fucking business. So if you have a great full-time job, stick with it. Continue to trade. Make money from both, because one month the job will be doing great and the trading will suck. You'll have other months where you're going to sit there and go, oh my God, I made like 3 times the amount that I do at my day job. Why do I stick with my day job? Because 2 months later, you might have a shitty month trading, but it won't matter. You have 2 engines working for you
Mm.
constantly. Keep it going as long as you can. Unless you're like some hedge fund guy making $1 billion a month, then fine. Yeah,
Yeah.
quit your job. Go for it.
Totally agree with you. So many people come to me, especially from my small. I got a small channel, but I've got quite a lot of young followers, and I get a lot of uni students or people that are just going into college saying, oh, I wanna trade, and once I start trading, I want to quit my job. I was like, how are you going to fund your account first of all? And you also need stability, and it's a very hard pursuit even without funding. So if you go into trading and you want to, you look at it as a way of being the only source of income, it's a very hard lifestyle, because as you said, your income fluctuates, and it's all right maybe now. I'm me, I haven't got any what's it called, dependence. But I don't know how it will be like if I have a family and my income's fluctuating so much. That can really be a hard life to live. But having a consistent stream of income through a normal job can also help, even if you're making some money off of trading. So I totally agree with you, and I think it's, as you said, all these YouTubers and all these not us though, but all these other YouTubers and all these Instagram people peddling this whole lifestyle of being a full-time trader, which some people can do, but even if you can, sometimes the better alternative is to have multiple streams of income, as you just said. But moving on, as the spiritual leader of the say Slippage Cathedral, yeah, what
Yep.
is what's your focus these days?
What is the spiritual focus of St. Slippage Cathedral for 2020? Well, Sister Christian and I, she leads the front office for the cathedral here. She and I talk about this quite often. So, um, I'd say number one, for me, embracing the stop loss as a power for good,
Yeah.
that it's not a negative mark on my P&L report, that I don't, just because I have a sizable account and in theory I can pound out of any trade I need to, doesn't mean you necessarily should. It's
Yeah.
a really bad habit. Yes, even though 98% of the time I can pretty much average out of something, there will be that black swan someday, some year, that erases years of my work.
Yeah.
So I am definitely making a very concerted effort to embrace the stop loss and be friendly with it, the same way I am with Tito's holy water. And it's okay. And I think if I can actually knock that out, I will actually become an even better trader. Second thing, keeping my trading approach as simple as possible. I mean, I am also guilty. Like, I'll hear about somebody talking about some cool indicators, something they saw on Thinkorswim, and it's like the holy grail of trading. Oh my God, if you just do these things and you put these moving averages up. And I'm always like tinkering or thinking I should tinker with my charts. And I always have to remember that I got my accounts where they are because I just found one thing. I did it over and over
Yeah.
again, rinse, wash, repeat. So keeping my charts as simple as possible. That's two. Probably number three, of what I like to focus on for 2020, participating and contributing to the momentum that my friend Brian Watt has going with helping other traders via, he's doing a lot of the YouTube streaming, and just me just generally being easily approachable, even though I have a fancy cathedral, to everybody on this platform. Like it's funny, like ever since sort of the cathedral changed directions from the DJ stop loss days, and where it's like, okay, we're gonna do a lot more educational stuff. I'm just gonna just open the books, like anything you want to ask me about how I trade. And I'm not saying that my way is great.
Yeah.
I will just tell you. You want to know a setting? Here it is. What chart am I using? Here it is.
Yeah.
What's my broker? That guy over there. That's been Brian's thing forever. I've definitely adopted it full force. And my attitude is like, I don't think that I'm better or that I'm like really training people. I sort of view it as like the same way I'm trading charts, I'm trading information with people.
Yeah.
So it's like somebody might be like, hey, that's awesome. Have you also tried this on your charts? No, I haven't. That's actually amazing. Let me do that. So the more approachable I am, the more transparent we all are, the more we share. It really is us against the machines. I just think that's just a really good policy in general for FinTwit. It's a really good policy for the church, and it's just a good policy for making money. Share, help each other.
I'm fully with you on that. When you build a community based on knowledge sharing rather than mentorship, you find peers rather than students.
Yeah. Man,
Um,
I've had so many mentor students hit me up in DM, and they're still actively in with their program or with their
yeah.
guy, and they'll ask me all these questions like, okay, how do you do this? And what are you doing that? And why do you do this? And why do you do that? And I'll tell them like, okay, XYZ PDQ. And then I also ask them in return, like, I'm not in that program you're in. Like what do they do? Like, what's their kind of general shtick? I'm not going to steal it. I'm not going to advertise it. I'm just kind of curious.
Curious, yeah.
And they'll talk it through. And it's like, that makes sense. That's actually very interesting. Okay. All right. So yeah, I mean, just the more information we share with each other, the better. Like, we're not Goldman Sachs. We're up against Goldman Sachs.
Yeah.
So, yeah.
So what's the trading sins you hear about over and over again in your weekly confessional booth?
The one over there.
One over there.
The sin bin.
Yeah.
The trading sins that I hear the most on a weekly basis. So many. Well, there's a couple themes. One, unfortunately, people blowing out accounts in a week or less.
Yeah.
It's actually more common than you think. We joke about it all the time, but it actually does happen a lot. I get more DMs to someone going like, "Yeah, I opened a live account on Monday. And by Wednesday,
Done. Yeah.
I'm like, how the fuck do you do that? Like, what'd you do? Like, bet all on black." So that's a big one, and it actually kind of hurts my soul.
Yeah, we've all been there, though.
It's like, fuck, because you know that person probably worked like 9,000 hours at Starbucks. They scratched together some money. They opened up a Thinkorswim account. They took one trade and then poof, gone. The second one, dollar cost averaging, which is fine. It's what I do. I love it. I believe in it. But you cannot do it on a super small account.
Yeah, no.
So dollar cost averaging, someone going like, yeah, man, I just opened a $2,000 account. I'm dollar cost averaging in it. And it's like, what the fuck are you doing? You're going to be the guy that in point one I just made, you'll be done in a week because you get one trade done. And then probably the third largest thing I hear is people who join a trading service with the expectation of riches and glory, and they totally believe in somebody else's worldview and how that person looks at charts and trading, and they believe that they can photocopy it, transfer it to their eyeballs and brain, take a few courses. Okay, I'll do 4 months at $49.95, and then boom, I'm just going to photocopy that shit. I'm going to be a successful trader living on the beaches of Kauai with my family, and that's it. I'm done. And I've actually heard people saying like, yeah, I'm actually thinking about putting my 2-week notice in, and I'm just going to do the trading thing full time. I'm in this course that my mentor's making like $20,000 a month. If I can even make just half of that, I don't have to be as good as he does. I'm set. I'm good. And I read these things going, what the fuck are you doing? Yeah, I got a killer job at like, Chase Bank as a loan officer making $150 a year. I'm going to quit it. What the?
There wouldn't be an industry around us if there was an audience for it. So it's like, yeah, it's crazy when I hear these stories, but it's wild.
It's every week. I get at least 2 or 3 DMs a week of someone like saying something similar. And it's just, like I said, it kind of breaks your heart a little bit.
Yeah. So just to round up, what is probably the most common feedback that you give traders that contact you about learning how to trade futures?
The most common advice I give people who want to trade futures, it's such a sarcastic asshole thing to say. Don't trade futures. Futures are the roadmap to ruin for 99.5% of anyone who fucking tries this gangster shit. Use that money for a killer vacation to Hawaii instead when COVID's over, of course.
Yeah.
But if they don't listen and they absolutely insist, I'm going to do this. I know I've got a killer job at Chase Bank as a loan officer, but I think I can make money doing this. So fuck it. I put 2-week notice in. Then here's my advice, and it's actually real advice. Try to sim trade. I know people give sim and paper trading a hard time. I am not one of those people. I kind of just consider it batting practice.
Yeah.
Sim trade for 90 days using only 2 time frames. My advice, 60-minute and a 5,000 tick chart, and no more than 1 moving average or none at all. If you can trade profitable with just basic price levels and some simple channels, even better, do it for 90 days. Work out your bugs, work out your approach, decide what your entry and stop loss strategy is going to be. Then, maybe only then, consider dabbling with a live account. Move over to live, because once it's real money, how you trade sim when it's, essentially monopoly money, as opposed to this real gangster shit right here. I will take this away from you if you're not prepared. when you decide to go live with a live account, there's lots of guys like me and Brian and James Judd and Trader Dante and a million guys that we will take this away from you if you come into this game underprepared. So work out your bugs, work out your issues, decide what your time frames are going to be. Keep it simple. If you've got to put 13 colorful things on the screen and it looks like crayons, you're done. So that's my advice.
Unless you're swing trading.
That's just swing trading. In that case, just buy something, anything, an ETF, and boom, you're done.
Yeah, no, that's some really useful information. No, it's great to get you on, especially because of some of the stuff, the work you've been doing on the satirical comedy side, and even as well with the live streams that you're doing to showing people how to trade live, and practicing what you preach. Exactly. So I really appreciate you joining me on the Pip Talk podcast, and hopefully we'll have you again. And I can't wait to see your next video.
Eddie, thank you for having me. The church thanks you for the service that you're doing. You're, like I said, you're officially my first interview, so I appreciate you taking the time to let me come on and preach my word to young traders. And yeah, this was actually a lot of fun. So thanks for letting me do it.
I appreciate it. Thanks.
So just because I have you on the horn, I'm just kind of curious. So you are more of an equity trader then?
Yeah. So I trade indices and equities. So I trade normally it's that DAX or the FTSE, which is the European equities. I mean indices, or just stocks and shares. But I swing trade, so I wait for reversals. But because I'm a spread better. Do you know what spread betting is?
I don't.
So in Europe, we don't. What we have is that something really cool where you're not actually buying the underlying asset, so there's no direct market access, but I can short or go long on a stock. But what I'm really doing is betting on the stock rather than actually buying contracts of the stock.
Okay, so is this essentially CFD trading?
Yeah, kind of like that. But yeah, it's kind of like CFD trading. But the difference with spread betting is that the way they calculate the profit made is, let's say a stock is at £1,000 and it goes up to 1,005. I can put £5 per point. So it goes. I'll put £5 per point movement, and every time it goes up by like one point, I'll make £5. So I can dictate how much it goes up by. So it's not how much I make, as opposed to with CFDs or with stocks where yours is a percentage of how much it grows, right?
Okay. Well, CFDs, my understanding with CFDs is you're essentially you're not trading the physical stock. You're not trading the physical. In a way, it's almost like a Vegas bet where it's like, okay,
Yeah.
there's Apple. There's Apple. I think it's going to go up $5.
Yeah.
I don't have the capital to buy, 100 apples. But what I can do is I can buy a CFD,
Yeah, it's leveraged.
which represents Apple.
Yeah.
And so I'm going to throw $1,000 at it. It'll represent X amount of leverage. And I'm really just trading with directly with the broker, not with the exchange.
Yeah.
And so I know there's all these people talk back and forth about yay, nay. The problem is, in my understanding, is that most of the brokers are really fucking sketchy, like the TradeNet guys. So you get this anytime they can yank the trade from you. They can do sort of weird slippage things with the fills.
Yes.
You get real dicey.
Yeah, that's why I made those series. Actually, I made a video series about. So I actually made a series, and it's probably one of my most popular series on my channel, where I review all of the different trading platforms, because the exact reason that you're saying. There's so many dodgy ones that do all these funny business behind closed doors, so they're hedging your trades, they're betting against you, they're closing your orders when there's no margin calls, all that type of stuff. But the platform I use, none of that stuff happens, and it's because I've actually incrementally reviewed all of the major platforms in Europe and come to the conclusion that the one that I use is actually a decent one.
Is it leveraged or is it
it's leveraged? Yeah.
So the reason why I'm asking is they're running ads like crazy here in LA for I guess Fidelity just started doing what's called fractional trading.
Yeah.
Where like they want to trade Google, but Google's $9,000. Obviously, you can't trade much of it. So it kind of I'm like it's sort of like when obviously the micros came out. It's like okay. Initially, I was totally against the micros. I'm like, oh, this is like the lamest thing ever. Brian's the one that kind of turned me around on it. He was like, he's like, but for a dollar cost averager like you, it's fucking brilliant because you can go in and just do these little pings at it. You can be wrong 48 times, until you're right. So I started to think like, well, maybe now that, and the other thing that Brian keeps telling me is like, now that equities don't have any commissions, it's sort of like for active traders like him and I,
Yeah.
it's a license to steal essentially. So I'm like, well, yeah, I guess I can go with Apple because I can do fractional trading. And
Yeah.
I don't have to assign all this money to this huge trade. I can go, I'm just gonna do a little bit of share here. I'm gonna do a half share here, a third share here, this, that. And I can just sort of slowly pick away at
Yeah.
and get into this position really slowly and just build it out. Like maybe actually it's a lot cooler than I think it is.
I
With
think fractional
CFDs,
trading
my,
is
my,
yeah.
my problem with CFDs was it's sort of totally different than that because you're not having anything to do with the equity. You're totally at the mercy of the broker and how much they want to fuck with you.
Yes, but it's, as I said, it's as long as you pick a broker that is directly mirroring the market and is not yeah, all it is you have to read the T's and C's. No one reads them. I actually made a video where I actually read the T's and C's of all the different brokers, and then I highlighted all the funny business, and and some of them were like, yeah, we look at the market prices, and then we use our own proprietary third party sources to dictate, and it was just legalese for saying that we dictate our own prices, so it doesn't mirror the market one for one. Some of them say that, and so it's once you know which brokers are mirroring the market one for one, the ones that aren't, then you're fine really. But yeah, I know what you mean. The unease, especially from the American market, is because you don't have access to derivatives that are betting derivatives like spread betting and CFDs and spread betting is not real direct market access, but it mirrors exactly what you guys do with the stock markets. But the difference is that we don't have issues with, like, I don't have issues with specifically like liquidity, for example, because I'm not actually accessing the market, and even for the most part, actually, I can't short some stocks because you're not actually shorting the stocks. But there's less issues around like level 2 and trying to make sure that your order gets placed and auctioning and all that stuff, because you're not actually accessing the direct market.
Okay. Yeah. Spread betting's just not a thing here. I don't know if it's because of just limited access or if it's just
considered betting. That's why I probably.
It's just more of a European thing, and they just do it than we do.
Yeah.
Interesting.
And it's tax-free spread betting.
Oh, is that what? Yes.
Yeah.
Well, one of the big reasons I trade futures more than I trade equities is for tax reasons. It's the 60/40 rule.
Yeah.
All right. So we're totally editing this in after the fact because the conversation's over. It's kind of like, you don't know how to fucking end it. So I'm going to take over the interview at this point. Thank you very much, Annie, or NOC, whatever you want to go by. Don't care. Just make money. Like I said, this has been awesome. Thank you for having me. Great interview. Thanks for coming to the House of Saint Slippage. I hope to never see you right here in the sin bin.
No,
I don't know if you know the usual sign off that I do. Thank you everybody for watching. So in the name of the bond, the equity, the ETF, and the holy derivative, amen. Thanks.
That's all.